Hey everyone, welcome back to the Thinking Crypto channel, your home for crypto news and interviews. Guys, I have huge news to share with you. Cryptodotcom has completed the largest sports sponsorship ever at $700 million over 20 years. They're going to take over what's currently known as the Staples Arena, and this is the home of the iconic LA Lakers. Well-known basketball team, obviously huge stars, Magic Johnson, Kobe Bryant, LeBron, and so forth. And I want to break this deal down for you because they're spending over $1 billion overall in their marketing. This is just aggressive marketing, and we see FTX Exchange is doing the same. We're going to talk about the United States has officially claimed control of the Bitcoin hash rate, leading the world as the #1 mining pool. And this is Foundry, owned by digital currency group Barry Silbert. Guys, what have I been saying for years? The global macroeconomic battle for control of the Bitcoin hash rate, right? My OG subscribers know about this. The United States was not going to sit around and let China control the hash rate. So I want to break that down for you. Fidelity, the powerhouse, is moving to Canada, taking their crypto services to Canada. I'll share the details there. We have a massive upgrade around VeChain, which I hold in my portfolio. I want to share that with you guys. And in addition, we're going to talk about Gary Gensler, the SEC, and XRP. Lots to cover there. Before we get to it, please go ahead and hit the thumbs up button, leave a comment below, and hit the subscribe button if you're new here. It helps support the channel, and it doesn't cost you anything. Guys, this video is brought to you by KuCoin Crypto Exchange, where you can buy, sell, and trade your favorite cryptocurrencies, and you don't have to pay high fees. KuCoin charges low fees. You can also stake your crypto and keep 100% of the rewards. There are no fees charged for staking. So be sure to sign up, link in the description. Let's take a look at the Bitcoin weekly chart. As mentioned yesterday, we are in that pullback corrective phase. We have a strong red candle being formed for this week, which is healthy. We are building support levels, and we will bounce off of this and head to new all-time highs. Note that this pullback phase could spill into next week, right? And even the week after that. We have to be patient. Patience is the key here, guys, and we are headed to new all-time highs, but we have to build support levels on the way up. Nothing goes up in a straight line. But just for perspective, I want to share the following from Blockworks. The tweet was from this morning. It says, feeling bearish, obviously because the prices are pulling back. Prices of the top 10 cryptos 1 year ago. Bitcoin, $17,645. Ethereum, $480. BNB, $28.17. Solana, $2.20. I wish I bought some of that at $2.20. ADA, 10 cents. XRP, 30 cents. Polkadot, $4.84, and so on and so forth. Perspective, patience. These things are so important when it comes to investing, not just in crypto. So just some, once again, context here as to what's happening overall, looking at the macro level. When in doubt, zoom out. All right, guys, Cryptodotcom signing a very large deal. They're going to take the LA Lakers, the NBA team arena, get the naming right. So, which it's currently called the Staples Center, and it's been called that for a long time. Now it will be called the Cryptodotcom Center or Arena, guys. This is so bullish. We saw FTX Exchange. They did it for the Miami Heat Arena, obviously down in Miami. And this is what I've talked about for years. My OG subscribers know about this. I talked about the mass marketing that was going to come, and billions and it will be spent on mass marketing. Now, remember, these guys are not putting this amount of money into marketing to lose it. They're trying to build a brand and bring customers in, and they know the mania hasn't started yet. So everybody's trying to do the land grab, put their stake in the ground. Hey, come to us for crypto buying, trading, and so forth, right? That's why you're seeing this money being spent, because guys, I'm telling you, you haven't seen anything yet. The fireworks are coming. Mania is coming, and it's going to go into future bull runs as well. So Staples Center name change tops list of crypto sports sponsorship deals. Crypto exchanges FTX and Crypto.com have invested over $1 billion in sports sponsorships in the past year. Here are the 10 largest deals to date. So the Staples Center becomes the Crypto.com arena. Crypto.com made headlines Wednesday when it bought the naming rights to the iconic Staples Center, home to the Los Angeles Lakers and Los Angeles Clippers of the National Basketball Association and the Los Angeles Kings of the National Hockey League. The 20-year deal was worth $700 million. Sources told CoinDesk and Los Angeles Times, making it the most lucrative naming rights deal in history. Guys, look at the money being spent here. This is a crypto exchange, right? I mean, can you imagine? You would expect maybe a bank or some massive brand, but these companies are still so young, but they're getting a lot of investment and they're spending it on marketing and building out their products. It is a sign of what is to come, my friends. And look, we saw some of this in the early days of the internet, right? In the internet boom. And look, there was a bubble and that bubble crashed, but there were legit companies that came out of it. But there were a lot of ads and Super Bowl commercials and a lot of marketing happening, right? I don't know if you guys were around for the pets.com commercials. And we're seeing the start of that here, guys. It's amazing. And this is so bullish. Remember, the money being spent, they're looking for a return on their investment, ROI, right? They're not spending it for the sake of spending it. So imagine what they're expecting and what they're predicting and projecting as far as the number of customers we can bring in, the amount of people coming in. And once again, we haven't hit that mania phase. Now, Jason Yanowitz of Blockworks tweeted the following breakdown, which I thought was really cool. Here's what Crypto.com is spending on marketing, and it's across multiple sports industries and arenas and so forth. Crazy watching Crypto.com execute a $1 billion sports marketing campaign. Number one, PSG, $30 million at a three-year deal. Number two, UFC, $175 million, 10-year deal. Number three, Formula One, $100 million deal, $100 million at a 5-year term. This Philadelphia 76ers NBA team, $10 million for 6 years. The Montreal Canadiens logo at the center ice. Doesn't look like we have a money amount there. Serie A partnership, and now the $700 million 20-year deal with the LA Stadium. Guys, do you see what is happening here? Those of you who are still on the fence about crypto, how do you not see this and just, once again, jump all in and start researching and taking a position? This is beyond a fad. Years ago, people, oh, it's a fad. Oh, it's a Ponzi. Oh, it's this, it's a blah, 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 blah. Look at what's happening. Real money is being spent here. And there's VCs and investment firms and big time investors and banks and stock exchanges, everybody getting involved. Now, guys, check this news out. I think this is incredibly bullish. It's not making the big headlines, and many people don't understand the optics of this. Foundry Services, which is a subsidiary of Digital Currency Group, which owns Grayscale. Obviously, it's run by Barry Silbert. They are a Bitcoin mining firm. They tweeted, today, Foundry US pool reached #1 Bitcoin pool in the world. So much hard work has gone into this accomplishment, and we can't wait to keep moving forward. Wow, guys. And here, Mike Collier, who's the CEO of Foundry, he said, we set out to be the world-class pool for the publicly traded miners. So glad to support their efforts and excited to see them grow their businesses. Guys, the #1 spot was owned by China for years, right? They controlled over 51% of the hash rate. Now, the United States is in the lead. Guys, like I said, for years, even when Trump was in office, I talked about this macroeconomic battle for control of the hash rate. When you have politicians and the biggest banks and the biggest Wall Street firms, your Goldman Sachs, Morgan Stanley, and all these people holding Bitcoin, the United States was not going to let China control the hash rate. This is epically bullish. And one of the things I talked about when China banned Bitcoin mining and the mining started dispersing and becoming decentralized around the globe was that it took away one of the big risks that was a red flag for many of the institutional investors, and just the optics, right? That this is now not controlled by China. So bullish, my friends. Only a few folks would get this. And I'm saying this because people sometimes they ignore what's happening here and the macro geopolitical setup of this, guys. This is incredibly bullish. And I think we're going to see some epic pumps coming, especially because these hurdles, these risks, these things are stripped away now. It's amazing what's happening. Now, one such institution who is heavily involved in crypto is Fidelity. They have, of course, launched Fidelity Digital Assets, which launched in 2018. They've talked about mining Bitcoin, and they have trillions of dollars of assets under management. Look at this. Fidelity launches Canada's first institutional Bitcoin custody service. They're going international. The move potentially clears the way for more institutional investors in Canada to invest in Bitcoin directly. And obviously it starts with Bitcoin, then it will move to altcoins. So the dominoes are falling, guys, and Fidelity is no joke. They're a powerhouse. Once again, trillions of dollars of assets under management. Here's a quote. The demand for investing in digital assets is growing considerably, and institutional investors have been looking for a regulated dealer platform to access this asset class, Scott McKenzie, FCC's president, said in a statement Wednesday. Pretty amazing. And this is Canadian FCC, by the way. I'm just blown away. I don't even have the words to talk about what is happening. And once again, this is not making the big headlines on Fox or CNBC or CNN or whatever. These moves are happening behind, kind of low key. They're setting up shop, but they're building the infrastructure of the ecosystem to bring more capital into the market. So bullish, guys. All right, VeChain. I hold in my portfolio. I'm very bullish on it. I think VeChain could hit $1 or higher at the peak of this bull run. We'll see what happens. But VeChain upgrades to Proof of Authority 2.0 consensus mechanism. The latest consensus mechanism upgrade is expected to improve several aspects of the network's security and key operations while making it even more environmentally friendly. So this is a great update. On Tuesday, VeChain reached a milestone in its 6-year history by upgrading its VeChain Thor mainnet to the first phase of Proof of Authority 2.0 surface consensus algorithm. VeChain is a supply chain tracking system that launched in 2015 and combines physical tracking with blockchain record keeping. Proof of stake, or I should say proof of authority and proof of stake, differ from proof of work in that they do not require mining to reach network consensus. Proof of authority achieves consensus by verifying users' identities, while proof of stake does this by staking coins in the network. The VeChain network runs only 101 nodes. Fewer nodes reduce decentralization, but increases speed and reliability of the network. This tends to be favored for commercial and industrial applications, By comparison, Bitcoin currently has 13,244 nodes, while Ethereum has 2,701. Let me end it with this here. An added advantage is proof of authority is less energy intensive and emits a very low amount of carbon. VeChain suggested that the new upgrade is the world's greenest consensus to drive mass adoption. I'm so bullish, guys. There's some very big brands working with VeChain, BMW, Walmart China, a lot of wine companies. VeChain, just put it this way, what could potentially happen is like you go on Amazon to go buy a product, VeChain could power the supply chain history, and you can click a little drop down and you'll see verified blockchain where this product came from. Obviously all of it on the blockchain, so it's verifiable, and VeChain could be powering that. That is what's coming, my friends. That is why I hold in my portfolio. I think it's going to be one of the winners coming out of this crypto market. Now, more money coming to the crypto market. KuCoin Labs launches $100 million VC fund to empower early stage metaverse projects. The world's 6th largest crypto exchange by volume is making its move into the metaverse. So we're just seeing capital coming left and right to invest in NFTs, crypto, metaverse, building out the ecosystem. So just another day, another 100 million and 500 million and a billion. It's in the trillions now. If you were to add all of this up, yesterday we talked about Paradigm, and their investment, or was it the day before? They're raising a $1.2 billion fund, I think it is. So we're just seeing funds popping up to invest in crypto, guys. Now, let's talk about some Ripple, XRP, and the SEC. Look at this. Eleanor Terrett, who's of Fox Business Investigative Journalism, she said, update on our efforts to reach to Gary Gensler in the SEC. A press spokesperson was responsive at first, but when we sent them a draft of our Ripple versus SEC opus for comment, they went radio silent. Have sent several follow-up emails since last week and haven't heard back. Want to know something? When I reached out to get an interview with Gary Gensler months ago, crickets, radio silence. Not even a, hey, no, we're not interested this time, or blah, blah, blah. Just crickets. He doesn't want to talk. And I talked about it yesterday, where Hester Peirce is more, a regulator of the people. She goes and meets with people, and she comes on my channel and does an interview. She talks to other people on Twitter. Gary Gensler, he is, of course, like I've said, a puppet being controlled by his bankster puppet masters. So he doesn't want to speak to a retail investor. He doesn't care. So it's pathetic. And now, as you can see, running and hiding. John Deaton sent an open letter to Gensler, and I believe he'll be emailing him as well. And he tweeted about this today. I'll give you a bit of a highlight. Dear Chairman Gensler, my name is John Deaton, and I am an attorney who represents over 60,000 XRP holders. Judge Torres granted us amicus curiae status in the SEC versus Ripple case. The SEC under your predecessor didn't limit its allegations to only include sales of XRP made by Ripple. Incredibly, the SEC lawyers are alleging the token itself is a security per se. This argument is akin to claiming the oranges were the securities in the Howey case. With all due respect, it's an absurd claim, and it's caused significant damage to retail investors of XRP, many whom utilize the token as a transfer/bridge asset, not an investment. Over 1/2 of all XRP holders purchased XRP at the first time unaware of the company Ripple. So he continues and so forth. I like what he's doing here, and I believe that he's going to be emailing Gensler. Let's see if Dirty Gary responds. We'll see. Most likely he won't. If he does, I will apologize to him and give him credit for that. But as of right now, he's now shown any interest, and he doesn't care about retail investors. Here's another example of that. BlockFi, the lending platform which I use, I promote, faces SEC scrutiny over high-yielding crypto accounts. Want to guess what this is about? I tweeted about it. How dare these little crypto companies pay out higher yield than the bigger banks who are just paying bullshit 0.01% in savings accounts? The incumbents are scared. They're using Gensler as a pawn to come after these companies. So you can't earn higher yield. They don't like you staking. They don't like you taking your money out of your savings and go putting it in crypto, staking it, DeFi, yield farming, lending it and earning yield. That's higher. They don't like that. And also, I can imagine folks who are behind the bonds as well don't like this. And that is why they're going after these companies, because how the hell is lending a security? This is stupid. So this is what's happening, guys. Gensler needs to be stopped. All right, guys, let me know what you think about this news. Leave your thoughts and comments below. Hit the thumbs up button, share this video, and I will talk to you all later.